All right, guys, I'm Joseph Brandcamp, and this is Average Joe Dividend Stock. So on this account, I always talk about my stock account every week. It was supposed to be what your account does during a recession, but as soon as I started making videos, the stock market started recovering. So yeah, as you can tell by the title, I'm going to be mainly talking about Whirlpool today. But before we get into that, I'm going to show you all my week. Here it is right here, my week, and then the last 6 months of my stock account. Alright, let's get into Whirlpool. I'm going to show you a screenshot of Whirlpool the last 6 months. In the height of the crash, you could have bought Whirlpool at $64.22. I'm going to show you that right here. All right, I wish I could have bought my shares at $62 or $64. I would have bought a lot more shares than just 5. I bought my 5 shares with my stimulus check. By the time I got my stimulus check, Whirlpool was back in the 90s. They were talking about another stock market crash that never happened, so I was started to wait, which was a mistake. I actually got my shares at 108, so I bought Whirlpool at 108. And the reason why we're talking about Whirlpool is because they beat their net earnings on the bottom line pretty good. So the stock shot up. It was up like $17 at one point after the day after they beat their earnings and stuff. So I'm gonna read a little article what the CEO said. So Whirlpool CEO Mark Bitzer is feeling cautiously optimistic. Headed into the second half of the year after a second quarter and June performance that he concedes was far better than the team expected. June demand was globally stronger than we could have anticipated, Bitzer told Yahoo Finance in an interview. First of all, the back end of the year, why we are cautiously optimistic, it comes from our June, and we see really strong orders books for July and August, and we're profitable, so that's the optimistic part. The cautious part is the entire COVID scenario and what it means to the customer's confidence and the unemployment. And what that means is buying behaviors, and is government programs start to taper off, and frankly, and particularly to the U.S. market. Pre-election is usually not the best time for consumer confidence. So put that all together, we are a little bit cautious about the rest of the year. But right now, frankly, short term, we are optimistic. Whirlpool performance is far better than Wall Street estimated in the second quarter, which hits after closing bell Wednesday. All right, net sales, they made $4 billion versus estimate of $3.62 billion on their net sales. Gross margins, 15.6% versus estimated 16.5%. Diluted EPS, $2.15 a share versus estimate of 99 cents a share. So they doubled their estimate. So that's why the stock price went up so much on their earnings, after their earnings. All right, full year sale guidance. They moved their guidance. It declined from 7% to 12%. Previously, organic scale decline was 10 to 15%. So they're saying their decline in sales, they already adjusted it. They think they're going to do better than what they previously thought. So Whirlpool's doing really good, despite what's going on. They're doing better than what they expected. And of course, they're getting hurt a little bit. The CEO, I watched the video also. The CEO talked a little bit about the demand for their products is still good right now. They're having really good sales, but fulfilling those orders is a little bit more complicated. You have a lot more people that's not at work calling in sick, or have the virus. They're missing a lot of people at work at their factories, so they're having to slow down production on stuff. But I mean, that's pretty much everywhere. Where I work, it's the same thing. Production slowed down and all that stuff. So they're just fighting through the battle right now with everything that's going on. But other than that, the business is really doing good. And I'm happy that I was able to get the shares at 108. I wish I could have got them at 64, but like I said, by the time I got my stimulus check to use it to buy more shares, it's already went up a lot. And that was another thing too. I wanted to buy Facebook, but by the time I got the stimulus check, Facebook went up to 200, which I'll show you my watch list here in a little bit. But Facebook went back over 200, and I didn't end up buying it. I bought Whirlpool instead. I got $300 worth of NAT, and I've been adding NAT every week, which I use my $50. I put $50 a week in my account every week. I use my $50 and I put it all in NAT. I bought 11 more shares of NAT. I think I'm gonna build it up to 200 shares unless the price goes up. I was supposed to buy Foot Locker this week, and like I said in my last video, unless Foot Locker goes up a bunch, because it was under my cost basis. I wanted to add another share. I have 15 shares in Foot Locker, but I put my money in on Thursday. Before Thursday came, Foot Locker went up like $3 or $4, so I didn't end up buying it. It was down in 27, now it's up in the 31s. So I didn't buy the Foot Locker this week like I wanted to. I just put it all in NAT because it went up. I guess people were saying it's a buy now, so now more people are buying Foot Locker shares and stuff, which I don't mind. I got 15 shares. If it goes up a lot, then I'll sell it and I'll look to buy some more companies that I like. So the NAT play, I'm gonna keep until next year for sure. I'm gonna collect all these dividend payments. Right now I have 3 free shares that are collecting more dividend payments. And like I said, I might get it up to 200 shares unless the stock goes up over my cost basis. Right now my cost basis is $5.24, I believe, $5.24. So I'm still well below that, and but I plan on adding more shares, collecting more dividend payments. So like the dividend for NAT is 20 cents a share coming up. So we got their earnings coming up too. I'm excited about their earnings. I'm excited about Kraft Heinz earnings. I was buying them before the crash, and yeah, I'm up on them right now. I got 56 shares, I think, 55 shares, and I got one of those are free, and then I'm about to get another free share. I got like 0.95 of a free share. I reinvest all my dividends, and then I'll show you the dividend payment for Whirlpool right here. And so as you see, Whirlpool has over a $4 dividend, and then you can see the 2 stocks that I had that cut their dividend because of everything that's going on. It's actually a smart business move because they're not making no money. How are they going to pay out dividends? So Carnival Cruise Line and Texas Roadhouse. Texas Roadhouse is still making money, unlike Carnival Cruise Line. It's not making any right now. Texas Roadhouse is still making money, but they're not making nowhere near what they were because it's all carry out. They opened up restaurants again and stuff, but states are starting to close back down, so that kind of hurts them. But Texas Roadhouse, I believe in the future, is going to be a main restaurant chain. They're building places everywhere. The food is great. The customer service is great. The CEO donated his whole salary for the year to help paying his employees. So I mean, just from that, I feel like the CEO is a great guy, down to earth guy. He cares about his people, and I like that. So seeing that, I think that motivates his employees to work harder for him, keep that good customer service, keep the good food coming. So I really love Texas Roadhouse in the future. I hope they start paying dividends again after this, because my stock count is dividend payments, but we'll see how it goes. I'd like to add more shares in it. It was below 50 at one point. Could have bought a couple more shares below 50, but I didn't pull the trigger on it. So I got a couple of those in the 30s, but as soon as I bought those, it went right back up in the mid 40s. So I wish I could have got more, but I only put $50 a week in my account. But I figure as I keep going the 50 in there every week, and as I start selling some of these stocks, I will have more money to play with, and I can do more moves that I want to do. And if there's another crash, hopefully I get my account built up where I can leave some money on the sideline, and a crash comes again, get all these great companies, what I call is like a sale, get all the stocks for half off, stuff like that, because a lot of stocks went under 60%. If I could have bought a lot of them, I could have doubled up my money. Like Whirlpool, if I'd have got it at the $62 or $64, it would have doubled up my money. So we'll just see how it goes from here. I really do like Whirlpool. I've always liked Whirlpool. I've always wanted to buy it. It's got big dividend payment, and when it dropped out, I was like, man, I really, really, really want it. It got my stimulus check, bought 5 shares of it. Kind of wish I would have bought more now, but I did buy $300 worth of NAT, and then I bought Qualcomm, big 5G player. But yeah, that's what it is. I'll show you my watch list right here, dividends, and I'm here every Sunday to talk about my account. So I'll see y'all next Sunday. Have a great week.